Good morning. My name is Patrizio Barccioni. I'm an Italian lawyer, partner of LED Taxand tax law firm in Milan, member of the global Taxand network. Today, I will speak to you about the tax qualification of perpetual bonds issued by Italian resident companies listed in the Italian stock exchange. On 31st of August, a few days ago, the Italian tax agency issued ruling 291. The rulings put together all the interpretation which the tax administration had issued in respect of the features of bonds versus equity and perpetual bonds, and provides today a very clear and comprehensive guideline about the tax qualification of financial instruments as equity or debt in doubtful situation. The case submitted to the Italian tax agency was the following. A perpetual bond would be issued with a fixed rate for the first 6-7 years, then an equity, a 5 years equity swap rate would be applicable, then after 5 years, a 5 years swap rate plus 25 basis points, then after the next 5 years and along, a 5 years euro swap rate plus 100 basis points. Well, under accounting principles, more precisely under IAS 32, paragraph 25, such perpetual bond should be considered as equity or quasi-equity. And under paragraph 35 of the same IAS 32 principle, the payments under such perpetual bond should be considered dividend and charged again under net equity. So the question submitted to the tax agency was whether or not under tax rules the perpetual bond should have to follow the accounting principles qualification, equity, or a more precise tax qualification which would lead to the qualification of the perpetual bond as a debenture or bond. The interpretation of the tax agency is the latter. The perpetual bond under the features described in the ruling should be considered a bond. The magic numbers under which the tax agency reached such conclusion are the following. Article 44 of the Italian Consolidated Tax Text, under which a bond is considered equity if the holder is entitled to benefit from the economic results of the company or of the business with reference to which the bond was issued. Or the bond is to be qualified as bond or debenture if such financial instrument is subject to an unconditional obligation to repay the same amount brought by the financial instrument, and subsequently the economic results of the company have no influence on the payments under such bond. The Italian tax agency followed this route also with respect on payment under such bonds, and in the magic number is Article 109 of the Consolidated Italian Tax Text, which says that payments under financial instruments which are not linked to the economic results of the company are tax deductible. Furthermore, this bond was perpetual, which implies that the expiry date was in connection with the dissolution of the company. The company could be dissolved by the statute, the bylaws, by decision of the general meeting, or simply by an insolvency procedure. So the bond and the life of the bond was strictly connected to the life of the company. Under these conditions, the conclusions of the tax agency have been clearly in the sense that the perpetual bonds with the features which have been described is a bond, so the interest payable, whether deferred or paid at the expiry date or during the life of the bond, is deductible, and if paid to non-resident investors, Law 239 could be applicable. So Law 239 provides for exemption from withholding tax when the payment of interest is made to certain qualified non-resident entities. So the picture is, for the first time, very clear. The guidelines are also very clear, and this is a very important news for Italian issuers and for foreign investors. Thank you very much for your attention.